They are all fresh. 'Tis a fearful odds.
Oh, that we now had here but 10,000 of those men in England that do no work today.
What's he that wishes so? My cousin Westmoreland? No, my fair cousin. If we are marked to die, we are enough to do our country loss. And if to live, the fewer men, the greater share of honor. God's will, I pray thee, wish not one man more. Rather, proclaim it, Westmoreland, through my host, that he which hath no stomach to this fight, let him depart. His passport shall be made, and grounds for convoy put into his purse. We would not die in that man's company that fears his fellowship to die with us. This day is called the Feast of Crispin. He that outlives this day and comes safe home will stand at tiptoe when this day is named, and rouse him at the name of Crispin. He that shall see this day and live old age will yearly, on the vigil, feast his neighbors and say, tomorrow is St. Crispin's. Then will he strip his sleeve and show his scars and say, these wounds I had on Crispin's day. Old men forget, yet all shall be forgot, but he'll remember with advantages what feats he did that day. Then shall our names, familiar in their mouths as household words, Harry the King, Bedford and Exeter, Warwick and Talbot, Salisbury and Gloucester, be in their flowing cups freshly remembered. This story shall the good man teach his son, and Crispian shall ne'er go by from this day to the ending of the world, but we in it shall be remembered. We few, we happy few, we band of brothers, for he today that sheds his blood with me shall be my brother. Be he ne'er so vile, this day shall gentle his condition. And gentlemen in England now abed shall think themselves accursed they were not here, and hold their manhoods cheap, whiles any speaks that fought with us upon St. Crispin's Day!
Hello and welcome to Weekly Open. I'm Brian, got Josh and Don on the line. Go to weeklyOpen.com/FTX. Buy the freaking dip if you want to live!
I don't know if I agree with that, but
I love the energy though.
I guess that's why we're here.
Gentlemen.
Talk about.
I'm just kidding, mostly. Not quite. Welcome. Thanks to FTX for being our partners. weeklyOpen.com/FTX. Don, Josh, how you doing?
Good. How are you?
I'm good. My buddy Winnie sent me that video, and he was like, this is Ledger on Twitter right now, so I had to share it with our audience.
Yeah, I mean, it's rough out there, but it's a good way to start the show. I like it.
I don't know in the movie if everyone dies after that. They probably do.
I would not be surprised. Yeah.
Don, tell us, are we dead?
I mean, we're kind of fucked, but there's hope, I feel like. So in general, it's looking kind of rough, but we're finally at levels where I've been wanting price to kind of go to. Like we're at this monthly support, was the previous swing low. I know we're like trading a little bit below it, but that's completely fine to me. As long as we're holding it on a closing basis. So I would say like we're at monthly support right now. And then if you look at the weekly, we're also in an area of weekly support. You could argue this entire thing is support. So we've had a consolidation here on the left. We had consolidation in here. And now we're back in that area. And that's not the worst place to kind of punt. I got to say, it's a support that we've been testing a bunch of times already. So like we've tested it. We've built it basically in February of 21. Then we've tested it extensively during the dip in July. And now we're back there. So that's not necessarily the best sign, but I think it's still going to be enough to at least produce a bounce. And then we're going to see whether that bounce is strong enough or not. Obviously, depending on whether the traditional markets just completely rug pull us. Because if they do, I don't think any TA on crypto matters. But I think when you're at these kind of high time frame support levels, those are the areas where you actually get the divergence from crypto and the traditional markets. So if we're ever going to show strength, I think this is the area to do so. That's why I personally took a bet. Didn't go all in, not even close to it, but I put some chips on the table. I feel like we're close enough to previous. I mean, I can do this on a clean chart. We're close enough to previous levels of interest that it just makes sense for me to kind of take a trade. And that's why like I bought a bit. I'm hoping that we can put in a bounce towards 40K. Max kind of target I have is 48. Anything beyond that, I'm not going to be on board. So if we bounce strongly, maybe pull back a little, go towards 46, 48, that's going to be me out. I'm not expecting it to go all the way back to 60K. I just want to see a bounce because it's been down only. And I think we have a little bit of over eager bears. But that said, the trend's down clearly. And traditional markets clearly look like shit, so it's a risky play. It's just like whenever I see sentiment flip this bearish, I don't mind taking a bet, and that's what I'm doing right now. Turns
into a bit of an opportunity.
Yeah.
All right, so I just want to focus on one thing that's been really important for everything. We tend to forget about it in crypto, but the VIX is basically at the line where it's either like some kind of top on regular volatility, right, or regular pullbacks in a market, or beyond this is like cataclysmic events, like the depths of the 2008 banking failures, the COVID crisis. There's not a lot of other things that like sustain beyond a 40 VIX. This is, when I was looking at this morning, it was like tapping 38. And I think that, it's possible it goes a little higher, but the opportunity starts to become significant at these levels, unless it's either a cataclysmic event or like a new regime of volatility or whatever. And you can bet month in, month out that it's not either of those things. So that's what kind of stands for me as being worth attempting it being a bottom. Additionally, like if you look at it on a long time frame, going back to 2008 on a monthly, does it look like a bottom or significant bottom? No, but on a singular candle, it strikes me as the type that could easily be a bottom and easily turn into some kind of bounce and larger bearish structure. But like you said, it could be 10, 15, 20% higher than it is currently, and then what happens with crypto. That's purely looking at legacy markets in order to inform our market, but I don't think that's like a terrible thing to do. One other thing is we're fully in the congestion zone from May and summer stuff, as you noted. So it's at least a good risk reward type of moment. And that's kind of what I'm looking at with crypto. So I also bought pretty much what I could. Different than you, like you said, you're not all in. I'm all in terms of safety. I'm into the degree where I feel like I'm willing to take risks. Everything else is like emergency money or things I'm not willing to risk.
I mean, I think it's a decent RR bet. It's risky, but it's fine. I don't know. Like, I woke up this morning, I looked at the markets, and I was like, oh, this looks like garbage. And then went to my computer and started setting bits at 14K. And I was like, okay, dude, this has to be the bottom. And then I looked at it closer and I was like, okay, this actually doesn't look too bad. And I don't know, like I don't mind counter trading my first impression. Like, I look at the market, I'm like, okay, this is going to zero, and I start like getting like panicky, even though I was sitting out for most of the move, at least on the Bitcoin front of things. So I didn't take a big hit from 60 all the way down to 30, but I was still like, oh shit, this is actually like bad. And then I looked at it again, counter traded my sentiment, and it's been working so far. It's not the most impressive bounce, but I think if we get back on the lower time frames, and this is the only kind of times when I actually look at the lower time frames, is in these kind of situations. If we get back above like 35, I think we can accelerate relatively quickly towards 38K. And then at that point, I don't mind tightening risk, doing whatever. But so far, not panicking at all.
You have to look at the low time frames here. Josh, what are your thoughts in response to what Don and I have said so far?
You know that meme, Melton posted it, where Homer's like talking to somebody, I forget, and he's like, your portfolio is down 50% so far. That's where I feel like a lot of this is headed, because of course we're down 50, 60, 80% over the past 2 months. It's like, yeah, the instinctual thing is this has to bounce eventually, right? And I'm not saying it won't. It's just things do not look good until we hear from Fed Chair Powell this week, the 26th. I just think there's a lot of uncertainty. I agree with everything both of you said. It's worth a punt if you want to take that risk. It is... The VIX is high, right? Like it's screaming in a lot of ways that this is looking like it needs to bounce soon. But the problem is if it doesn't, it gets super ugly. We go 26K on BTC. If we break 30, we go 18, 16 on ETH. If we break whatever we're at now, it's so hard to even keep track of prices. What are we at, 2250 or something?
Yeah, roughly.
So yeah, it's like things should bounce, but if they don't, then I guess that's just trading, right? Because on high time frames, things look abysmal. BTC is breaking down the weekly cloud, ETH breaking down the weekly cloud, Solana, like nothing high cap looks good. I don't know anything low cap that would look good here. The supports for all this stuff is significantly lower still on high time frames. Like the 200 week moving average is at 19.7 on BTC. So, I don't want to be a doomer, but not only are we completing this head and shoulders on BTC, but we're also setting up for completion of this M double top on high time frames for BTC.
Josh, what about this edge to edge cloud bottom situation? Like if this was in reverse, and I guess I can do that if I can remember the button, like this would be the type of thing where you would expect it to pause as well, right? Like, so you clear target 1, you hit target 2, and if it's price exploration beyond that, but the RR says like that's where you close the trade.
Right. If I was short from 44, I would certainly let some go here. Would I short here expecting more immediately? I don't think so. So sure, intra-week bounce. Maybe we bounce to 42, 41, which is the other edge of the cloud, but I wouldn't set yourself up mentally, which is my fear, because people always trade on 5-minute basis, right? Set yourself up mentally for this like mega bull run. It's back, baby. We're at the lows. This is it.
I think
I would not
Don's
go there.
point for the whole year was like crab the range. That's probably max pain, right?
Yep.
By the time you decide to get in, you're like, there's not a lot of upside, but you're going to puke the downside, and you're going to do it again. You're going to do it again. You're going to do it again. And you're going to get chopped to bits. Yep.
That's how people lost all their money in 2018. That's how I think they're going to lose their money again. It's just something, it's just how it works, right? I don't know why, but whenever the market just starts turning down a little bit, people just lose all sense of reasoning and they expect all-time high and all-time lows immediately. And neither of those things happen very often when it's ranging, right? So like I'm not saying we're going back to 60, 70, 80K. I think that's very, very far from the truth. I think we're going to go back to 40, maybe mid 40s. Maybe if we're like super lucky, 48K. And then I think we're going to go back to dumping, and then we're going to go back to chopping. I think that's kind of the best case scenario. The worst case scenario is just that the traditional markets nuke us, and then I don't know where the bottom is going to be, because if we lose 30K, I would not, like, I don't have anything below 30K. It's one of the reasons why I like really wanted to buy it, because the next support that I have is 14. And I mean, I could see that if the traditional markets completely disappear, but if you're betting on 14 while we're at 30K support, I think you're kind of overdoing it a little bit. And that's why I have to take a trade here, because if we break 30K, I'm going to get out of the way and wait for strength for 14K. And that is very, very far away.
So 20K means nothing to you?
No, I mean, it's like, I think we're trading on monthly time scales now. And I mean, 20K is decent, but the best kind of support that I have, like, has to be 14K. So I could see a bounce from 20K if we like lose the support. But I would think we're probably going to bleed out lower. So I think right now, this is the one bet that you can take before it all goes to shit. So might as well take it.
This 20 month is fascinating to me. I love these kind of hidden high time frame 20 period moving averages, because they tend to be like really impactful. Like if you look back here, it's where we capitulated from. We treated it as a form of support too on the post-COVID stuff. It would be an epic place to bounce. Like, what's amazing, if people tell you, like if you tell people, you know, don't forget to take some off the table, like when ETH is 4K, whatever, and they're yelling at you for being an idiot for selling, or like my friend Dale paid off his house and he like just got like crap about it constantly, and a week later everything's down 40% cheaper, and they're telling you you're an idiot for buying. Like, who do you listen to in those scenarios? You know, like if you have a long-term plan, sure, like do whatever you need to do, but it's not the worst place to buy. It's a better place to buy than it was at 40K or 4K ETH or whatever else. I don't know.
Well, we can go through, like, you go through the high time frame metrics that I think are valuable. We're still not there yet as far as MVRV, PUL, 200 week moving average. Like, we're talking about ultimate bear market lows, though. We're not talking about what you guys are talking about, which I understand, I get, but I think it's important to mentally position yourself, because when I hear stuff from you guys, I take it as, oh, they're bullish. Like we're going to go to the moon, right? But in my head, I'm thinking this trend is wrecked. High time frame trend is wrecked. Whatever legacy stuff is wrecked. The backdrop is so bad, and plus China's gone. So like, what do we get? What's going to need to happen here? And oh, by the way, we have all these corporate treasuries who are sitting on a ton of ETC getting nervous as their own stock plummets. Sure. Like, what are they going to do?
So let's go back to 2018, and let's say February, like the second top, let's equate that to our higher high, right? Call it the same thing, even though it reduces weeks off time from all-time high. The time it took to bottom was 42 weeks, okay? We are from all-time highs here at like 13 weeks. So 42 weeks would be, as an equivalent, basically July of this year. And in that time, the same metrics can continue moving. You know, like from 19K, it might be 24K or something like that. And that gets closer and closer to kind of matching where you are right now. So you're trying to hunt where's the appropriate place to start risking on. And what do you do if your options are buy versus sell? Do you sell after whatever this has been, like 12 straight weeks of down, or do you like take this trade, or at least hold and wait until it bounces before you risk off again, knowing that, okay, there's an opportunity for like 25K or 14K, whatever on the bottom. Like, but is this where you risk off? I don't think so. I really don't. I think you can trade low time frames and do whatever you want. But if you're like macro processing, I don't think this is anywhere near where you would want to actually risk off.
Yeah, I mean, if it goes to shit, it goes to shit. It's just how it is sometimes, right? I mean, you got to take that risk. That's just how trading is, right? Like buying, if you bought down during the crash in March, there was a risk that Bitcoin was going to zero, right? We were all sitting there looking at BitMEX.
Yeah, like 3 million on the order book or something.
Yeah, and buying there seemed like a really shit idea back then. And I think like most of us bought some. I sold mine way too early, like the stuff that I bought a shitload, but sold it too early. But still, like these kind of times when it gets really, really rough, they don't come by too often, and they're never like, you're not sitting there being like, okay, this is going to 60K immediately after. And I don't know, I think we might be somewhere like in an area where we're like trading like this, which is like the December 19 kind of area, where I think we could easily go back to 42, and then we could easily just completely wipe out. And
yeah, I find it very similar to the summer we spent 2-3 months grinding there along the lows. But Don, you remember when you and I and Cred were talking on y'all's show, and we were essentially talking about the move from like 32 to 44. And I was saying how like 44 is where you say, all right, I'm going to like wait, like that's where you really watch the market. And then it spent a long time, really screwing with you in this area. And this is where you either risk off or watch closely, and then you kind of observe. And I think that's essentially what we're looking at again. Now, we could spend a month essentially grinding in this area, getting rid of the people who like entered this dip on leverage and that kind of stuff, without making significant lows. And when it comes back, like you said, 41, 42, 40, whatever, that's where you like pay close attention and figure out what's next. It feels like a similar thing to me. The one caveat in terms of where here we spent so many days going sideways, I don't think legacy markets were going down at the time. And then also total days from the high, I think it plays a real role in dips. Like how long have people been in pain? And in that scenario, it's about 2.5 months. And that's kind of, we're about the same time now, about 2.5 months of pain. So even though it was different, this one went fast and then slow, and this one went slow and then fast. I think they have a similar vibe in terms of where you start seeking upside.
Yeah.
I think you take it slow. I think if you want a DCA, not investment advice, for the love of God, it's certainly looking better than it's looked. And that's kind of all there is. I mean, if you're trading this on high leverage, low time frames, you're listening to yourself mainly anyway. So nothing any of us are going to say is going to help you one way or another, I think. You have people holding on to like dormancy flows or like fees. What's it called? Lending and borrowing fees.
Like funding.
It's like, yeah, this stuff will like affect things, and we'll have a bounce. That's crazy, right? We'll bounce like 5% intraday or something. But
I think we're
going to bounce 20% a day, and then people are going to be like, "What the fuck?" This is one thing that I learned in 2018, because that was kind of my first significant bear market. That even if you're correctly positioned bearish, stuff can go up much, much higher than you think and still be bearish. So like, for example, we had the move from 20K all the way down to 6K. And I was pretty sure we were gonna go to 5K and then bounce, and it went to 6 and then started bouncing. And I closed some shorts, but I was like, this is still a bear market. This is hilariously bearish. I don't want to be buying. And it went all the way from where I could have bought, which was like 6 or 7K, all the way back to 11. And I was sitting there with my hands in my pockets being like, I'm an idiot. I got the other side of that trade afterwards, but still, like these kind of bounces, they're much more aggressive than you think. And I think that's something that we could be in for. But I don't think anything is really going to change the trend anytime soon. And that's kind of how I'm playing it. That could be me just reading too much into it. But from my experience, crypto always bounces more than you think. And then it also goes down much, much more than you think. And that's why I think that there could be like a 10, 15, 20% day easily, and it could still be bearish.
That happened. That's happened in markets historically. Ray Dalio's book, Big Debt Cycles, is really, really good. And it shows kind of these bear market trends where you get 30 and 40% bounces off the bottom, and it doesn't look like it in the long term, but every single time people are like, oh, bear market over, up only, and then, get wrecked again. And I think that's supported in historical markets. And those inefficient markets of old in stocks are probably pretty similar to the inefficient crypto markets of today, I was just clicking around some of my charts, and one of my squiggles, I think this was weekly open last week, was on here. I wish I followed that advice. Kind of going from the one garbage zone to the second garbage zone. And then, this would be your 39, 40K bounce before, if you go like full 30K, like you're talking about, Don. I mean, how painful is this? This is super painful. People would be so wrecked on both directions, right? They'll probably buy back at 40K thinking like trend resumed. Like this is going to be hard. I think if we're trying to get something across, is don't think like this is going to be easy. This year is, I think, decidedly going to be difficult to trade, to figure out like how do you manage capital, how do you take risks or take off risks. These are extremely difficult decisions that won't be simple for you to make. They're going to depend on your own personal tolerance for risk and for long-term thinking or short-term thinking. I think in the long term, these are probably the type of numbers where you're like, holy crap, remember when we were scared that day? And then like ETH's at 10K instead of 2K or whatever. And you remember capitulating your Ethereum at $2,100 and it never got below 2,000, and now it's at 3 or 4, and you're coping, like that's super possible. Like there are so many outcomes where the market will try to rip you from your coins. And in my mind, this is not the place to be ripped from them. It's just my mind.
I think Josh's advice is really good as well. Like for most of you, just sitting tight, chilling is probably a good play for most. If you're shorting the support, I don't know what to tell you. I think that's quite late. But if you're just sitting here being like, okay, I don't really want to buy this because it really looks bad and I don't know how macro is going to play out, I think that's a fair stance.
Yeah.
And I think that's like, this is not a buy that's not 100%, okay, you have to buy this. It's a decent setup, I think. And
I think that's right. Like if this was down 40% in a day and it was like just clearly a capitulatory bottom across all markets, then sure. But we're not there. It's a bloody day where there's opportunity for a good bounce. What's interesting, crypto was recovering pretty well. Stocks are like, they're like a bounce, like the bounce sheet meme where there is none, like just throw the bounce sheets on the floor in the grocery store and they don't bounce up. This is pretty nasty. It got about 20 minutes of upward momentum and now it's retesting. So legacy markets need to figure themselves out here. Obviously if they go from a 2.5% day, which is a big deal for stocks, to like a 4 or 5% day, that's going to cause greater capitulation for us. But what we're seeing is crypto prices hold up on these low time frames. At the same time, stocks are going down. That said, crypto got a head start on the dumping.
Yep, we dumped so much more. Yeah,
we had all weekend and all night to do it. Like I literally set bids for Ethereum when I was going to bed, and I just set them 10% below. So I got filled at like 2,200. And then this morning I bought more at like 2,160 something, like almost Pico bottom of ETH. And that was a 10% move from where I went to bed, like 8 hours before the legacy market opened. So it doesn't surprise me actually that we're starting to bounce where they're still struggling, right? Because it's just a liquidity issue.
Mm-hmm. But I think it's something good to see still, even though like I hope that we would dump more into the weekend and then kind of have more room to recover. That didn't happen. Like we bounced, like we just died for a little bit. But like seeing this difference for the S&P and and Bitcoin is at least something. Doesn't have to hold. And the same thing happened, right? We had like Bitcoin showed quite a bit of strength before completely disappearing when the S&P kind of died, right? So we had this move up, and Bitcoin took quite a while longer to dump, and then just kind of pulled with it. And you don't want to have that happen here, and it could happen, but Bitcoin is definitely showing some strength, I think.
We got a good question from Chimpleton. He said, given you guys all agree on looking at low time frames in these conditions, what are you looking for? So Don, can you walk us through how you would use high time frames for levels and low time frames for signals?
Yeah, sure. So in general, I start out with the high time frames, right? So I look at this, I'm like, okay, we are at support. I showed you the monthly support earlier. This is an area where I could see us diverge from the S&P or in general bounce, even if we're not trading in tandem with the S&P. And then you kind of look at that, you can put that on the daily or even on the hourly. Let's put it on the hourly for a second. You go there. And I mean, for me, I just go from one time frame to the lower one and then lower and lower and lower. Daily doesn't really help you much, besides that we're somewhat at support as well. So you have a little bit of confidence there, not too much. And then you go to the lower time frames, right? And this is basically where you start fishing for capitulation. We haven't had that. So capitulation kind of looks like this. When you see it, the candles get like massive. That's where you actually, like if we did this exact candle into the support instead of like having these stair steps down, I would tell you guys to fucking buy it and just, I would not be, okay, this could be a good buy, this could not be one. I just took it because it's good risk reward. I would be very, very certain that that would be at least a temporary bottom, right? So this is one of the things that you look out for when you get these capitulation wicks into high time frame support. That's always, or like almost always, a good buy. Obviously, not always. There are no 100%ers in trading, but close enough. And then you kind of look at how is, for example, what I do on these low time frames is I look at, okay, is Bitcoin trading stronger than the S&P? Is it kind of trapping people in a position so you can kind of follow, okay, who's taking what trade, like what kind of big positions are getting into it? Then you go on the low time frames and just see if there's any chance that people are just shorting the bottom with bigger size, starting to panic or like trying to make a breakdown and it failed. So you can do like a bunch of things. I like the S&P kind of correlation the best. So when that starts breaking down, when you see Bitcoin showing strength while the S&P shows weakness, and that maintains for a while, that's very important, not just for like a minute or two, 1 hour, but just for like 4, 5, 6, 7 hours, or maybe even a day or two, then you can be reasonably sure that you're gonna get at least a sizable bounce if the S&P moves up at all, because you want to just buy the stronger pair. And right now, for example, Bitcoin is the stronger pair. Doesn't have to mean everything goes up. It just means if the S&P bounces, Bitcoin is going to go up more. And then, yeah, you just look at the previous lows. You're like, okay, if we get back above those lows on the low time frames, there's a good chance that everyone that sold this, and there's quite a bit of people that started panicking down here, they're going to rush back into position, so you can at least get back to the range highs and you can take it from there if you're trading the low time frames. That's kind of how I look at it, but there's more to it than that, but it's, yeah.
Execution is still the hard part.
Yes.
Yeah. I mean, what is the saying? Like, it always looks worst at the bottom. And then like trying to time those reversals, figure out exactly like clear at a level, because you're doing two different things. You're buying the super knife, right? The really deep wick knife, which is what you said you prefer if you're actually trying to snap a bottom. Otherwise, you buy some kind of confirmation level clearance type of stuff. Thank you for walking us through that. All right, what else are y'all looking at or looking for? Is there anything else that's interesting, or are you basically going to pay attention to Bitcoin and Ethereum for now?
I actually got a really nice buy on Atomin. I was eyeing, we talked about this for weeks now.
Super strong on a relative basis.
Yes, I was looking for a buy, basically using the Bitcoin pair as like my reason for entry and the USD pair for my entry. And I saw like I was starting to turn a little bit bullish on Bitcoin. So I was like, okay, I at least have to buy one altcoin, because I've been saying the altcoins just offer more reward, and I don't want to be the boomer again that just buys Bitcoin and then gets like 2 or 3%. So I bought Atom. That's been moving up nicely. I don't really have a good setup on the USD pair. It's just whatever, really.
It tapped the 200-day like perfectly, 27.50.
Yeah.
I legit wanted to just go all in at him at that point, and I was too scared. So I didn't do it. So then now it's like retesting on the bottom side. This isn't my favorite place to enter just from a like fib and levels perspective. But the relative strength is fantastic. So I don't think it's a bad play by any means.
I think the biggest issue is still what we've already touched on multiple times, but this correlation with legacy. Like I've had 3 people in different friendship groups make this comment, like, what's the point of crypto if it's just going to be like another tech indice, right? So that is certainly on people's minds. If we're this correlated, a lot of people would rather not participate in the volatility and just sit in like the safe stuff that is legacy traditional stuff. And I don't think they're wrong necessarily, because some of these people, like, that's why they're here. They're here because we're uncorrelated, or at least we were up until like March 2020.
Look at this 2022 open on the S&P.
It's bad. It's really bad.
Yeah.
But that's why the decoupling, when it happens, if it happens, is going to be super important for crypto, because then that'll show like, oh, look, we're strong again.
There's a point.
Because we got the gold people coming out saying, oh, look, gold is up. Gold looks great, guys, and then they're like, oh, crypto, that followed the NASDAQ. That looks horrible.
Wow.
They're not wrong. They're not wrong. You can't fault them for that logic.
While we're talking is really important, just because, the S&P is now down 2.8% on the day. Yeah. So it's entering like, are we going to capitulate new lows here? Looks like we might be doing it live. This yellow box is based on...
Well, somebody get the devs, please. Get the devs to do something.
Well, what you're seeing here is like, I bet, there's got to be some forced sellers getting picked up here in the legacy market.
Yeah.
You could... the bottom of this yellow box is kind of a weekly structure. I know these look like ridiculous supports, but this is a different asset, and so it's somewhere this 420 type of area, which is funny as a meme as well for the SPY. Like this is getting severe in terms of buy opportunity. I'm pretty convinced this is going to come back up here to like the 440 to 450 area, and it would roll off somewhere in there, right? Like something like this, as a lower high. The question is like, how much do people get taken out first? So this is becoming very impressive. Now almost down 3% on the SPY, 3.6 on the other, and crypto is still trying to hold this in. So to your point, Josh, like if we start seeing signs of that divergence, then that's really good for us. Like
a real divergence, not a divergence on like the 5 minute that people were celebrating last week. I'm not talking about you, but like just in general, like this is horrible for legacy to be breaking supports like a hot knife through butter. That's really bad for a lot of stuff that isn't crypto.
Mm-hmm. Yeah, you're seeing it in oil. Like oil's down 3% right now. I know I'm just jumping around charts, but this is what I do when things get volatile. Like got to see like where are things changing from where they were to me, this is purely a sign of people needing liquidity, right? Like otherwise, why do you sell the strongest asset that's basically in price exploration on a multi-decade time frame? It's because they need liquidity, and you're starting to see gold be affected by it too, although it's obviously still the strongest. You're seeing the dollar move up pretty strongly. People are being hit, man, right now.
I mean, it's really rough. I think we're going to actually, the worst part about all of this is I think we're going to break the correlation in crypto at some point, and then people are going to be euphoric, and then we're going to go back to following it again 1-to-1. It's really, really hard to kind of guess where the traditional market's going to bottom out, because those are not the markets that we have much edge in, I would say. I mean, I would at least say that I have much more edge in crypto than I have in trading the S&P. And that means that if we're this closely correlated, my edge over other people in the market is obviously smaller than it usually is. So you kind of have to be a little bit more careful, because this is, for me at least, harder to analyze. And it's just something that we have to deal with now. It used to be nice and uncorrelated. Nowadays, I think what we're going to do is we're going to have periods of time where it's a little bit uncorrelated. And then we have most of the time where it's just trading like the S&P. And I hope I'm wrong on that, but it's just how I see the market mature. And I mean, I would hate it, but then we have like other markets. We can switch over to NFTs. We can switch over to something else, altcoins, everything.
At the peak COVID panic levels, we were getting stuff like this where it was limit down or 5% intraday volatility, but we were getting these limit down overnight. Like futures exchanges getting halted. My guess is this is the portion of the move that we will not have this time, right? Like this type of a liquidity crisis. We're in this zone right now. We're currently here. And so at some point soon, I just think you're going to get this multi-day bounce and then see what plays off of that. But even if we get more, my personal gut would be that you don't get below kind of this. And this is probably your VIX 50-60 type of area. We went to the VIX 80, 85. Like that was all-time crisis level. Like the whole world was shutting down and no one was expecting it. So you zoom to the front. We got we've had four really impressive candles. Today was our first like gap down, move down. I mean, we're so close to a significant bounce. Not to say it's the bottom, but like you're running it. These are liquidity issues that start to pop up here. That's all this is now. This is not anything else. It's just liquidity. And we have to consider how does that play for our market.
I mean, it's still people piling on short. It's still people risking off who didn't risk off already. Yes, it's a liquidity, but it's like, it's everything, right? It's uncertainty from when the Fed's going to do whatever they're going to do. It's like, for me, it's like peak fear because nobody knows what's going to happen, right? The markets hate uncertainty, even though it's pretty certain that they're going to raise rates to some degree. And I don't even want to talk about this stuff. I don't want to talk about legacy. I don't want to pay attention to Powell at all. But when we're this correlated, what else can you do,
Bybit's has predicted funding of negative 0.06. That's like huge bottom things. Okay, X2. I'm just throwing stuff out here. I know maybe it's...
Yeah, I wouldn't short this, but man, if I'm long in this, it's multi-month time frame. It's like I looked at the drawdowns for BTC and ETH and the recoveries. And almost invariably, any drawdown of this size takes 100 days to recover. BTC a little sooner, like 70 to 80 days. But historically, it takes a quarter to recover, which would bring us maybe to Q4, maybe Q2. Like it's only January 24th, so a lot can happen between now and April, sure. But
yeah, multi-month or multi-hour. That's like one of the two, right?
I wouldn't expect miracles, I guess.
I mean,
but we've said that already.
I'm pretty sure this is actively bottoming. It's not making new highs on the VIX. It's making new lows on price.
That's going to be interesting to watch anyway. I mean, for me,
the good news is we have supports that are lower on the BTC. The bad news is I don't want to test those supports because those are those are ironclad, never have been broken ever supports that I don't even want to get close to. So I'd much rather we do something here in the 30 to 60K range.
Yeah,
it's rough. It's so rough.
It's really, really rough. Yeah, I mean, with regards to like the S&P, most people have kind of been predicting that we're gonna see like the everything bubble pop. What are your thoughts on it? Like for both of you guys?
And isn't that what's happening right now?
Yeah.
I mean, you could argue it.
The free money train is over, right? People are finally realizing that. Well, that's what it feels like.
Do you think we're gonna go towards like macro towards the COVID lows? Because that's like the interesting part, right? Because people are saying the everything bubble has popped and now we're going to be like entering a bear market, but it has to drop like more than 50% or like roughly 50% to go to the COVID lows, right? So that's such a huge drop to just kind of make up for the last 2 years and it just be like at zero.
Yeah, I think like 30% is literally like forever generational type opportunity. I don't think we make COVID lows. I think the 2020.
Are you talking about legacy COVID lows or?
Yes.
I think the 2020 Open was like right before the COVID panic. That high as a support, I could understand. It's also close to the 200 week. That's like, but even that's 30% off. That's like if that happened quickly, I don't even know what I would call it. Like we're going to war, which
that's something else we didn't talk about.
Yeah,
but
somebody in the chat brought up Ukraine. Like it's, and Jonathan in the chat just said Ukraine getting priced in right now is possible. We'd already talked about this, hadn't we? About the Ukraine risk and kind of shrugged it off. But like, there's a lot of posturing going on. We're doing like ocean level war game crap, that's
uncertain times.
Yeah. And people hate uncertainty. So that's,
I mean, there's a reason why I'm like not all in. And that is because I'm not certain what is going to happen all over the world. So you just take bets where you can get them at like good levels. But like I said, if 30K goes, fuck, we're going to have some fun. It's going to be interesting. But for now, I'm still positive. I mean, it's just these kind of days on the S&P, and people always kind of look at this and they're like the everything bubble pop, whatever, it's going to zero. What usually happens, even if this is the general top of the S&P, it's going to have bounces on the way, right? Like every other market as well. You're going to have some bounces on the way. And I think even if it breaks down today or the next few days, you're going to have a nice bounce, like Ledger said. So, yeah, at least something there. I'm not entirely sure if I'm on board with the everything bubble thing.
I mean, credit people have healthier credit lines than they've like ever had right now, which I know that sounds crazy, but like debt is not out of control on a personal or corporate level, as far as I understand. Yeah, I don't know. I don't
even know what's worth paying attention to in legacy, like PE ratios. Like I you can look at all these metrics and they all look.
I think you start looking for value. I think, we've talked about this before as well. Like, what do you have to do in the market to get people finally out of this stuff that's ridiculous, right? Like, how do you get rid of the AMC trade? How do you get rid of the GME apes? The only way to...
Are you telling me I should get rid of my SimpDAO stuff? Because...
But the only way to end that speculation is probably punish everybody so that then kind of the better stuff rises up. Like the flight to quality that occurs afterwards. But even the quality stuff gets punished on the way, I mean, nobody's thinking like, oh, Amazon's an absolutely garbage company or whatever, you know what I mean? But it's getting smoked. Jeff Bezos was literally selling like crazy all the way through here. But how do you end the turbo speculation? The Dogecoin stuff or the Shiba or whatever else. It's going to punish quality along while you're at it. It's just part of it.
Yeah, the GME thing is really, really interesting because isn't their thesis that everything is going to implode and then GME is going to go up because fund managers are like, for some reason, like going to lose their money and have to close their shorts or something? I don't quite get it.
I think that narrative's gone.
Yeah, I mean,
they're all blown out. Like anybody that was looking at this stuff as like a short squeeze or whatever, they're wrecked because a lot of them did it with options that are way out of the money and their options expired or are going to expire, and there's no gamma effect on that anymore. It's just, that trade is over. That concept is over. It already did. It's like when you are on the moon asking when moon and you don't realize that you're there, that's what GME did. And
I mean, I would not want to hold this shit in any universe. Now the bounces on GME and AMC and whatnot, and they'll come as those people that were like clenching their butt cheeks and were short and couldn't get out. Like that's where they start unloading, and that's where the 30% bounce comes from. But it just becomes new distribution, right? Where the hopium sets in again, yada yada. Cycle continues. AMC actually almost fully retraced already. At least the latest pump.
Sure, yeah, that makes sense. But it was like its peak short levels were $4 or $5. So people are still. It went to 73.
70, 73. Nuts.
Yeah. So imagine the collateral that someone had to put in to maintain those positions, or just like let it go and take a huge loss. It's crazy market, man. But to get that stuff out of there, you got to sometimes you just got to punish everybody. Question in here is going to be like, is the market reflecting the actual economy? Is the are we pricing in COVID being over as as an example? It's possible. That's fascinating, man. Inflation is not changing though. Inflation's still going to be high. I don't think we'll go into QT. Tapering QE is all we're doing so far. They're not actually selling assets. They're just not buying assets as strongly. Powell's already admitted that we're stuck on low rates because they can't service debt well enough if rates go too high. So you get maybe a few rate hikes, which are already being priced in. I think that's the type of stuff that starts establishing the narrative for, okay, well, I think we're done. And we can, kind of carry on with life again.
I think we'll know this week, hopefully. Mm-hmm. If they come out this week and say, we don't know, then we're in deep trouble. But if they come out and say, this is what's going to happen, XYZ, that's best case. Yeah. Even if it's bearish, that's still the best case.
Yeah, if Powell does come out with fisticuffs or something, that would certainly be fascinating. But he always plays it fairly delicate. I'd be very, very surprised if he stopped that now.
Because whatever they're going to do, they should have done months ago. But they didn't, and now this is the result, right? It's not going to get any easier to do what they need to be doing the longer they put it off.
Yeah.
I mean, that's in general how life works, right? You kind of push something backwards and it's always going to end up worse. It's actually interesting to me that every meme coin is kind of dying. I mean, I had this tweet on there for, I don't know if you guys remember, but I was talking shit talking Shiba and Dogecoin when they were going sideways basically, and then they 10x'd. And I still think that is basically a good indication of the froth levels in crypto. If you go back to the origin of those moves, like Dogecoin, for example, 100 sats ish, and Shiba all the way back to what I just indicated, I think then we can move on from a sideways or trending down market in crypto, as long as macro allows an upwards trending one again. Because as you said, I think this kind of stuff has to be bled out. And the best way to do it is just by taking some time. Like people are not going to, whenever you have markets that go down like 60, 70% in a day, people are just going to buy it, right? I would be buying Dogecoin if it went down 60, 70% in a day, because I would expect it to have a nice bounce. But the worst part for everyone, especially like the holders, is just a market that you cannot trade, right? And Dogecoin is one that you cannot trade right now. It's just down only with no real technicals to speak of.
I think for what it's worth, this is also where our dominance is going to reset on crypto. Same argument as I was talking about with quality on legacy. Same thing for crypto. Probably going to be Bitcoin outpacing everything. Maybe ETH keeping up. Maybe one or two altcoins doing well. Again, I still believe like Solana's toast. Layer 1 trades over for the most part. Wouldn't want to touch any of it on a relative basis. You just have people in massive profit that are going to distribute into bounces. So I'm probably going to keep an eye mostly on ETH and BTC personally, and potentially change my narrative on the ETH side as well if BTC takes over. Here's Sol ETH, by the way, on that 200-day. Also, just looks like massive head and shoulders distribution top. Like if you want the lesser risk, I think one way to play it is just freaking short the relative pair.
Yep.
There's nothing wrong with that trade. I think this is going to go horribly for Solana for quite a while. So there's multiple ways to play. I'm looking at the correlations and I'm looking for the bounce in ETH and BTC. Josh, you want to close this out?
Just stay nimble out there. We've all seen this before. I was looking at these drawdowns, and if you've been in crypto as long as some of us have, it happens all the time. Don't get too worried. I see a lot of people concerned we're going to zero. Even if we temporarily go to zero, we'll bounce back, baby. It'll be fine. It's gonna be a rough couple months for sure.
All right, I gotta go. My dog's going nuts. Thanks for being with us, everybody. We'll catch you soon. Go to weeklyopen.com/FTX, where you can buy the dip, panic sell, earn yield on stables, whatever you need to do it. FTX, weeklyopen.com/FTX. We'll talk to you later. Bye-bye.